Hello, everybody. Jeffrey Beamer here. I'm the senior strategist with Ewo Trader. And Brandon's out this week, so I'm going to be running the ship solo today. So why don't we just jump right in and talk about last week's trade? We did it on a company called C3AI. The stock symbol is AI. And what a nice little winner we had. The stock popped up very nicely, and at the close of trading, I mean, we would have had bigger profits throughout the day after earnings last week, but we ended up with about 135% return on the trade that we did last week, and so that was about a 3-day trade, 135% return through that earnings event. So, really AI is hot right now. Anything with that kind of name on it, we wanted to trade. So we did that last week and got a lot more info for you today. So let's move into today's headlines. This is an interesting week that we're going to have this week as we talk about what's kind of on the list. Last week, the FTC blocked Kroger's plans for a merger with Albertsons. That's kind of a key headline in that space, and that'll come up here a little later, why I included that headline. But really, market is quiet today ahead of key economic data. That's ahead. There's several announcements coming out this week, economic wise, and market's a little quiet today in anticipation of those events. And then one thing that I wanted to bring up is there was a big article about a Wharton School professor. They call him kind of a hot shot. He's very concerned about the staggering debt that the U.S. has, and then the combination of really mortgage rates and interest rates overall spiking, and what a problem this can cause. Now, we've been talking about that for months here, about that dynamic where we just keep printing money, U.S. consumer debt continuing to rise, interest rates rising, inflation. The inflation numbers that are reported aren't really reflective of real life inflation that everybody feels when they go to the grocery store or a restaurant, or picking up anything that the family needs. It's really an interesting dynamic, and this could carry on through the rest of 2024 and into 2025. So we'll keep an eye on that as well. And then really the last headline is really that earnings season continues. Last week we had over 1,000 companies declaring earnings. This week we have over 700. It's a big earnings week. And we trade a lot through earnings. We trade both straddles, strangles, and then we do some other strategies, which I'll talk more about in just a moment. But this is a key season for us, and we will see how the stocks are performing, really how the earnings this week affect the markets along with that economic data. So let's go to the charts here and take a look at the broader indexes. Let's start with SPDR, SPY, which is our proxy for the S&P 500. And you can see here that we are continuing to power higher on SPY. And if you've watched this channel for a while, you know that I do like to use the candles, including the Heikin Ashi candles. And here we have really three. The strength continues. You'll notice here on this chart, there's no wicks on these last two candles. This just means continued strength, continued buying into the broader markets, and we continue to power higher with our next target at 515. We're really close to that. We're trading at 513.05 at the present moment, and we could easily see 520, 525 on SPY here relatively soon. I'm going to leave the Heikin Ashi candles on, and we're going to move over to the NASDAQ and look at the Qs. same thing. I mean, you have the same type of thing going on. Very strong candles. We're in the middle, really the upper portion of the channel as we continue to press higher. And 450, we're trading at 445.40 right now. We could see 450 here within the next week or two on the NASDAQ as that continues to go up. But these two for the day, and if I switch back to the normal candles, you can see that we're up just slightly on the day. And that was the same thing on Spider. And really what's leading us right now, believe it or not, are the small caps. And I drew that trend line there a few weeks ago and talked about how, hey, if you were looking for a trade to the downside, we just needed a break of that. Well, instead, this index of small caps, it has now broken through some pretty significant resistance up there at 205. And if we apply the Heiken Ashi candles there, you'll see very strong bars all through there. Look at that. No wicks on the bottom, just big green candles. As this leads all the major indexes today, it's only up about 40 basis points, but still that betters all the other indexes as we go through, as we begin our week this week. All right, so moving on, let's talk about oil. You know, I noticed that gas prices had, at least in my region here, had crept up last week. Refined fuel is getting more expensive. They have come down about 5 cents since the high. And I just thought this was an interesting day today where USO has reversed. And this is actually a bearish candle. Not a strong bearish candle, but a bearish candle nonetheless, with the USO being down 1.2% on the day. So $75 is proving to be some resistance. And if I bring in a little bit more data here, you'll see that's where this little gap is that we had back here some time ago. And that previous support, which is back here, if I just draw another line here, I'll dissect that. So this previous support back there is now future resistance, and we've come up and we're hitting that that level right now. So I find this pretty interesting that we're getting some breaking out of the range and moving higher on oil, but it's giving it back up today. Going on to the metals right now, let's look at gold and silver. What a move. Boy, something got into these metals this past week. There was a rally going on, and then Friday we had a big rally on gold, and today we get the follow through. Gold is up 1.6%. We were up over 2% on Friday, another 1.5% today, and that pales in comparison to silver. Okay, silver has just absolutely exploded off of support. You can see we were trading down. We were feeling a little pressure on silver, but boy, it got down close to that little area of support and just has taken off, up 3% now, almost 2 days in a row. So we'll see. We have significant resistance up here at 22.5, and again around 23.25. We'll see if silver races back up there. But unlike stocks, the metals can really rally hard to the upside. We've got some nice progressive moves to the upside on stocks, but on the metals, man, they are really taking off right now. And then a sector that I've been really watching, and that normally it takes a back seat to equities, are the bonds. And it's important to note how that's really affecting, obviously, the economy and different sectors of the economy. We'll start on the long end of the range here with the TLT, which is the iShares 20-year Treasury Bond ETF. Okay, this is the long end of the curve. And you can see here that a week ago, I was talking about this zigzag pattern, and we were kind of targeting coming down to around that $90 level. Well, interestingly enough, bonds have leveled off here on the long end of the curve. All right. In fact, rates have come down just slightly, but this could be just a breather before the next move. Now, honestly, I'm not sure where the next move will come. I'm still very bearish on bonds. I think rates are going to continue to push higher, but as a trader, you always need to ask yourself, what if I'm wrong? All right, so let's look at the short end of the curve, which is SHY. That continues to uh, show weakness, meaning short term rates are rising. And this is just going to widen that inverted yield curve, which I'll show you here in a moment. But rates are jumping, the bonds are down. This is the 1 to 3 year treasury on SHY, and you can see that we're kind of pressuring down to 81.5. All right, we could see that possibly as early as today, and we could test those lows from Friday on the short end of the curve. That's an interesting dynamic. We need to keep an eye on it, because if the inverted yield curve continues to widen, that could cause some problems. All right, so let's take a look at that chart that I was referring to now on that inverted yield curve. Last week we were at about a 1.20 inversion, and now we are at 1.23. So that's beginning to widen a little bit, and that inversion has been going on for well over 18 months. That's not healthy. Um, um, that inverted curve is just not healthy. We need to be longer on the long-term rates and lower on the short-term rates, but we haven't seen that now approaching almost 2 years. All right, so it's very interesting on the inverted yield curve, where we are just been lingering. This has always been historically a 6 to 18 month um, leader ahead of a recession, but we're not seeing it yet. So we'll keep an eye. We'll keep an eye on that. Now, mortgage rates have leveled off. We crossed the 7% mark. On the next chart that you'll see here, we leveled off. We crossed above 7 on a national average, and we've leveled off around 7.15, 7.25, and that is really, in the big scheme of things, that's not a bad rate. All right. I really don't see us getting back down to the threes. However, there are certain economic conditions that could arise where we do go back down, but the better bet is higher for longer, these rates, or even higher. And I don't think this will cause really a problem in housing until we really get up into the 9 to 10% range as far as mortgages go. But we'll keep an eye on it. I know there are certain parts of the country, specifically Florida, that are seeing some real issues with current existing homes and condos, that they're seeing big inventory buildup in those sectors. So we'll keep an eye on that. So as we get through take a look at the next slide here, we have earnings coming up. And I mentioned earlier that we have over 700 companies declaring earnings. This is just the most anticipated earnings based upon market cap that we have for this week. And you can see some significant names on this list. All right. We don't have the Amazon or the Nvidia or whatever, but still, you do have some big players. And today after market close, we do have GitLab, GTLB. Tomorrow morning we have Target. Tomorrow after the close, we have Nordstrom's and Ross Stores. A couple of retailers there. CrowdStrike, a technology company. And then Wednesday, we is where it starts to get interesting, because we have wholesale inventories at 10 a.m. We have Foot Locker, a couple of retailers, some consumer goods like Campbell's Soup coming in Wednesday morning. Wednesday after the close, more earnings coming forward. And then Thursday, the big announcement on jobless claims first thing in the morning, along with several earnings, including Kroger, which we mentioned in our headlines, And then we finish out the week with DocuSign Thursday after the close, and then just one on Friday when we have the unemployment rate coming in Friday morning. So lots going on economic wise and earnings wise. But this takes us into the trade of all these stocks, what we're looking at this week. And if you want to know really how we trade through the earnings event, we do have a free guide that's available to you through ewotrading.com/straddle. So ewotrader.com/straddle. That is the address to get the free guide, and it is a pretty significant guide on how we trade through earnings. Now, one way that we trade through earnings is like we did with C3AI. We're doing straddles and strangles, looking for a stock to really move. But another way that we trade is looking for those stocks that have upcoming earnings where the stock just doesn't really historically move much. And that brings us to today's stock that we're going to watch, and that is Kroger. Historically, Kroger just really hasn't moved very much through earnings. It will tend to gap around, but I think the news is already baked in, considering what happened last week with federal authorities blocking the potential merger. And so you can see the stock has rallied, but this is just an earnings play. So Kroger has their earnings announcement on Thursday, and this trade is designed to actually capture the lack of movement. Now, it looks like the stock is moving, but what we're doing is we're selling premium, we're selling expensive options in advance of the stock just not reacting very much. Historically, the move on Kroger is about 5%. The break evens in this trade, which is an iron condor, is right around 6.5. So we are looking for that consolidation to continue just on the news already being out on Kroger. So that's it for this week. I hope you enjoyed this quick little run through of the markets and our trade of the week. We'll look for another successful trade. That trade has some nice potential for rewards if we're correct, but also we minimize losses by trading smaller. So we'll see how we perform next week as we come back, and I will talk to you then again next week. Everybody have a great trading week. Take care.